My friends, there has been a data breach, a fidelity size data breach, and it does have to do with the crypto ETF. In fact, 77,000 customers' data was leaked. So these big custodians, although no one lost money, they are not airtight. Let me tell you something. Fidelity said personal information was stolen in a recent data breach, but stressed that its customer accounts were not affected. Crypto exchange traded fund issuer Fidelity Investments confirmed a data breach compromised the personal information of over 77,000 of its customers. They filed with Maine's Attorney General stating that 77,099 of its customers were impacted by the breach, a fraction of its 51.5 million user base. So not a huge amount, but still like 77,000 people, and someone did have a data breach. I don't think any funds were lost, though. An attacker accessed customer names and other personal identifiers between August 17th and 19th by using two customer accounts that had already been recently been established. The unauthorized access was terminated on August 19th, so it happened for 2 days, and that's how they got 77K. When Fidelity first spotted the breach, the $5 trillion asset manager said it received assistance from external security experts to resolve the matter, which is good because they definitely need to resolve the matter. Fidelity stressed the third party didn't access any Fidelity accounts, so once again, the funds were not compromised. And it's offering free credit monitoring and an identity restoration service to those impacted for 2 years to detect any unusual activity that may affect your personal financial situation. So they're offering that in terms of compensation, free credit monitoring. But remember, like, they're not offering any monetary compensation because no money was actually stolen. It is also a good idea to remain vigilant for fraudulent activity or identity theft by regularly reviewing your statements, Fidelity added. It's Fidelity's fourth data breach over the last 12 months, with 3 others occurring on March 4th, March 18th, and July 19th. So Fidelity hasn't really been the bastion of security that maybe it wanted to be. We, Fidelity Investments, are contacting you to notify you of a data security incident that involves some of your personal information. This is their letter. We take the protection of your information very seriously and are reaching out to you to let you know what happened and the steps we have taken and to provide you with additional information and services that may be helpful to you. Between August 17th and 19th, a third party accessed and obtained certain information without authorization using 2 customer accounts they had recently established. We detected this activity on August 19th and immediately took steps to terminate the access. An investigation was promptly launched with assistance from external security experts. The information obtained by third party related to a small subset of our customers. Please note that this incident did not involve any access to your Fidelity accounts. But this is actually with their crypto ETF customers, I believe. So not very good look for Fidelity, but only a very small part of their customer base was actually accessed, and they didn't lose any money. So I don't think people will actually be too mad about this. The SEC was sued again over XRP, but this time not by Ripple. So Gary Gensler has a lot more trouble coming. This time it was a company called Bitnomial, and it sues SEC over the claim that XRP is a security. Obviously, that disrupts its business. The XRP token is already regulated as a commodity, and the SEC duplicates and compounds the regulatory burden by saying it's a security, Bitnomial said in the lawsuit. So they just basically say the SEC just makes it more complicated, which they are absolutely right. The SEC does make it more complicated. Crypto exchange Bitnomial has sued the U.S. SEC Commission and its 5 commissioners, accusing the agency of overextending its jurisdiction over digital assets by claiming that XRP is a security. That, like I said, does cause a lot of confusion and does interfere with their business. And of course, we know that last year they ruled that XRP was not a security, which the SEC is appealing. But the thing with the appeal is until you win the appeal, or if you lose, it doesn't really matter. But until you win the appeal, the law of the land is the original circuit court ruling. And Bitnomial claimed in its October 10th suit filed in an Illinois federal court that XRP is already regulated as a commodity and the SEC asserts jurisdiction over a product that is already regulated by and subject to exclusive jurisdiction of the CFTC. So the SEC could get in itself over a lot of trouble over this, because the courts have already ruled on this. And the SEC itself has said that XRP intrinsically is not a security, and the courts have said XRP is not a security on the secondary market. So they have a very strong case. In doing so, the SEC inappropriately duplicates and compounds the regulatory burden on Bitnomial, the exchange added. In August, Bitnomial, which the CFTC approved to trade crypto futures in 2020, filed a self-certification with the CFTC to list XRP futures contracts on its exchange. The exchange claimed the SEC contacted it and asserted that XRP futures are securities and required Bitnomial to register as a securities exchange before listing the products. Bitnomial said it cannot possibly comply with the legal requirements to list XRP futures, as the issuer of the token, Ripple Labs, must register it as a security, which it hasn't. So they can't actually do this. And of course, they say this blocked Bitnomial from listing XRP futures. So the SEC, despite its loss in court, is still trying to push its agenda. And I do think that is going to get Gary Gensler in trouble. What they're wanting is a declaratory judgment that XRP futures are not securities and an injunction preventing the SEC from asserting jurisdiction over derivative products or pursuing enforcement action against the company or listing them. So they are asking for a lot, but I do think they have good reason behind asking for that much. And to compound Gary Gensler's problems, one of his own commissioners is basically pointing the finger at him. Commissioner Mark Yoida joins Hester Pierce in saying that the agency's crypto policy is a disaster. Mark Yoida is the other Republican SEC commissioner. The SEC's Mark Yoida says the regulator's approach to crypto has been the wrong one, and it needs to provide clear guidelines before launching enforcement actions. The United States SEC's approach to regulating crypto is a disaster, and the agency has done nothing to clarify rules, says SEC Commissioner Mark Yoida. Yoida claimed on October 10th Fox Business panel that SEC Chair Gary Gensler had been enforcing crypto policy without ever providing clear rules or guidance for crypto firms to follow. Our policies and our approach over the last several years have been just really a disaster for the entire country. We've been sending this policy through enforcement, and we've done nothing to provide guidance on it. And as a result, this has been achieved by the courts, and different courts have ruled different ways. So he's basically saying there's been no consistency in court rulings with the SEC, which is absolutely right. Yoida's comments came a day after crypto exchange Crypto.com sued the SEC, saying the regulator has issued it with a Wells notice, a document warning of a potential enforcement action. In the lawsuit, the Singapore-based crypto exchange alleged the SEC overstepped its authority and challenged the regulator's view that almost all cryptocurrencies should be considered securities, which they definitely should not. And many, of course, have criticized Gary Gensler for such. So a lot of pressure is actually coming down on Gary Gensler in this issue. His own commission isn't completely with him. And now two of the commissioners, not just one, not just Crypto Mom, but two of the commissioners have actually stepped out and are not in sync with Gary Gensler's thoughts. Another quite troubling development recently is that lots of Bitcoin have actually been sent to exchanges. And over 63,000 Bitcoin in the last 72 hours. And that could actually be a reason why Bitcoin has actually dropped in price. It's recovering now, but if another sale would definitely put it down again. So it is the recent 50-point basis rate has actually raised Bitcoin's price, but that might actually encourage some profit taking. According to data from CryptoQuant, roughly 28,000 Bitcoin was sent to exchanges on October 7th, an additional 23,500 Bitcoin was transferred to exchanges on October 8th, and roughly 12,000 coins made their way to exchanges on October 9th. So a lot of action with Bitcoin exchanges. While the exchange inflows do not necessarily translate into immediate selling pressure, it does foreshadow some selling, which could be troublesome. High inflows indicate that investors may be prepared to sell in the near future. Typically, investors would not transfer large sums of digital assets from cold storage to exchange wallets unless they intend to liquidate those assets. And obviously, we do not want them to liquidate those assets because liquidating those assets would not be great for us. Bitcoin started the week trading at over 64K, but fell to approximately 62K by the end of the trading day on October 7th. The decentralized currency also recorded red candles for the next 3 trading days and broke below its 200-day exponential moving average, a dynamic level of support on October 10th. Macroeconomic factors were partly responsible for Bitcoin's downward price action this week, as markets process higher than expected inflation data and uptick in jobless claims. So that obviously sent the market down again. But there was this big block of 63,000 Bitcoin that were sent to exchanges in the last 72 hours. Obviously, even selling a portion of those within the last day could have definitely caused this Bitcoin drop. So we do actually need to keep our eyes on that. I think like some of the unsure macroeconomic factors have actually prompted some of these holders to actually send their Bitcoins to these exchanges to take some profit, because we did go from 54,000 in mid-September before the sell-off to about 63,000. So that is about like $9,000 worth of profit to take. And I do believe that some people did actually send their Bitcoins to exchanges in order to take this profit. This also could be, some of the government's Silk Road Bitcoin that maybe they started to auction that are making it to exchanges. We're not really sure, but we know that like there was over 63,000 Bitcoin at $1.83 billion that was indeed transferred to exchanges beginning on October 7th, which would actually be Monday. So this week's downturn in sell could actually be that 63,000 Bitcoin, because obviously that's a lot of downward pressure over the course of just 1 week. And the Bitfinex hacker, the feds actually want a lenient sentence for him because he's actually been cooperating with the SEC, with the feds. And if you cooperate with the feds, you get a more lenient sentence. They obviously want to encourage more people to actually cooperate because it does actually make it easier for them. So they only want 18 months for this hacker called Razzlecon. Prosecutors said Bitfinex hacker Heather Morgan should receive a lenient jail sentence as he provided substantial assistance to the government, and that's why they're pushing for a lenient sentence. Generally, when a prosecutor pushes for a lenient sentence, they get a pretty lenient sentence because the prosecutor is the one that's trying to, actually prosecute them. So they want him to spend 18 months in jail for her role in laundering 120,000 Bitcoin stolen from crypto exchange Bitfinex. Now, 120,000 Bitcoin, like $3-4 billion. That's a lot of money. Usually you would be getting a lot more than 18 months. In the October 9th filing, federal prosecutors asked that Morgan be given more lenient sentence after she provided substantial assistance in her and her husband Yela's Liechtenstein's plea bargain in July 2023. Prosecutors also argued for a lighter sentence for Morgan as she was a lower level participant, so she wasn't one of the high level guys relative to Liechtenstein, and noted that she only spent a small fraction of what the pair stole. Morgan pled guilty to money laundering and fraud charges in August 2023 for helping launder the Bitcoin, currently worth $7.2 billion. She faces a maximum combined sentence of 10 years in prison. So they don't want 10 years, they only want 18 months. And this is the letter they wrote. The United States of America, by and through the U.S. Attorney for the District of Columbia, respectfully submits its memorandum in aid of sentencing. In light of defendant's substantial assistance, the government moves pursuant to Section 5K 1.1 of the U.S. Sentencing Guidelines for a downward departure, downward meaning less sentence, from the advisory guidelines range and recommends a sentence of 18 months at offense level 14. The government respectfully submits that such a sentence would adequately serve the interests of justice as codified in 18 U.S.C. In support of this motion and to assist the court in fashioning an appropriate sentence, the government submits the following motion and sealed supplement. So, Morgan and Liechtenstein were initially believed to have been responsible for the laundering funds stolen in the 2016 Bitfinex hack. However, Liechtenstein later admitted to being behind the hack and pled guilty to money laundering charges. Liechtenstein pled guilty to one account of conspiracy to commit laundering and faces a maximum sentence of 20 years in prison. Government prosecutors said Morgan was initially unaware of how Liechtenstein had obtained 120,000 Bitcoin, but by early 2020, Liechtenstein told her that he was responsible for the hack, and she aided him in laundering the funds and conspired to conceal his movement. So basically, Morgan was the secondary person. Liechtenstein was the main person. And Morgan actually told on Liechtenstein. And because she provided substantial assistance, they don't want her to have such a strong sentence so they can incentivize others to kind of rat out their own people as well. So Morgan made a conscious decision to engage in specific criminal activity, helping her husband laundering millions in stolen funds for personal gain. It was not a momentary lapse or impulsive decision. The defendant consciously participated in money laundering conspiracy and conspiracy to defraud over the course of years. And usually that would be serious. But of course, like I said, the government definitely wants more people to rat out their partners. So offering the carrot of much more leniency on their sentencing could actually lead to that in the future. And they probably want to make a decent big deal out of this in the future because crypto is kind of like a new and upcoming thing, and there's going to be a lot of criminals and Fed lawsuits on this, and they basically want people to make it easier for them and rat out their partner, so they're offering lenient sentences. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.